Hello everybody, it's me the Boss Hog, and today we're going to look at my stock portfolio as of the week ending the 18th of March, which has got all the way back up to 99k. Let's do it. Alright, so recovery is ongoing. Portfolio now comfortably in the green, which feels pretty good, having been beaten up definitely over February and also in early March. And March to date is now also flat as well, with a couple of months remaining. So that feels quite good. I would just say, especially if you look on the UK side at the start of the week, a little bit of pressure just because my largest position had a bit of a pullback, although it was up over 20% last week, so maybe that was to be expected. And broadly speaking, things were moving in the right direction. So plus 5.5k overall on the week, again, feels great. No capital added this week. That's quite rare, I would say. But between remortgaging and some family photos, we don't have a ton of money. But to be fair, our plan was always to not add a ton of money between January and March. And that's mainly just because we had some costs in that period, but also from April 6th, we'll be able to put money back into our ISAs, which is where most of these investments sit, which are very tax efficient for my wife and I. So needed funds for those things, and then we're just waiting for April to begin at this stage. Honestly, though, very little trading. I just managed to be quite disciplined this week and decided not to make too many moves. And honestly, if it wasn't for Friday, I wouldn't have made any moves at all, but just a very small something on Friday, as well as a very modest dividend there, as you can see, for realty income. I would just say as well, I'm probably going to remove the line under the summary table next week. I've had it there now for a few weeks, for I think obvious reasons, because it was having such a big impact on my portfolio. But my positions in Evraz and Polymetal, these are London listed, but Russian focused miners. Obviously, they've been absolutely hammered. Evraz in particular has Roman Abramovich as as the largest shareholder with about 30% stake. So at the moment, that's kind of been in a frozen state. You can't even buy or sell Evraz stake anymore, so I couldn't sell it even if I wanted to. Poly you can sell out of, but you can't buy it. And from my position, basically, I'm just sitting on this unrealized loss. Like mentally, I've written off the remaining 1.2k. If that happens, it happens. It'll suck, of course. But I'm hoping that there are underlying good, profitable businesses here. So I'm hoping that eventually, that it'll recover. But I've got no illusions that I may well lose my money at this stage in these holdings. And even if I make it back, it's going to take many years to do so. So right now I'm basically just riding it out. Not that I have any choice but to ride it out specifically for Evraz. And yeah, just the one dividend this week, so nothing else to add. But let's have a look at my top 10 next. All right, so whereas last week, especially week on week, most of it was red, this week it's completely the opposite. And likewise, last week, National Express was one of my few that was black for the week. But this week it had a bit of a pullback. That was despite a Motley Fool recommendation. And also the other thing I want to update on, so I mentioned previously that, they basically got gazumped by a German private equity for Stagecoach, so a fairly large bus company in the UK. And I didn't want them to go back with an increased price, and pleasingly they didn't. Instead, what they did is basically published a letter more or less directly to shareholders and said, well, actually, although that German private equity is offering more money, our deal is better in the long run because it's basically going to appreciate in value as a result of, basically coming together as a business and merging, and here's our business case for it. So they've obviously not quite decided yet to walk away from this, and they're presumably quite disappointed. But again, I mean, so they're basically offering today about 85p a share is what it works out as. This German company is offering sort of, I think it's 110 give or take. So again, significant difference. I don't want National Express to enter in a bidding war. I thought what they offered was reasonable. So what National Express did is they basically come back and they sort of said, well, hang on a second, actually, if you look at what the value will be in the kind of, medium to long term, really it's like 180p a share. So our deal is actually better. You just have to be prepared to wait for it. Whereas the other company isn't really going to add any value to what they're, giving you up front. So I was basically fine with that. Again, National Express, that would be quite a chunky acquisition for National Express, so it's not like it's risk-free. About a third of their market cap would be Stagecoach, so chunky. And they don't need it, so I don't want them overpaying, and I'm fine with the position they've taken this week. Gamma, no update this week, but they do publish results on Tuesday next week that are expected to be toward the up end of analyst estimates. Potentially that's why they had a decent week, but we will see. Next up, Hollywood Bowl, nothing to add here, but a good week, a good actually finish to the week for Hollywood Bowl. Next up, Games Workshop. So they had another Motley Fool recommendation, different article, but this is the second week that that's been running, as well as Simply Wall Street recommendation as well. So yeah, I'm seeing some good signs here. By the way, this is mainly the company I have been buying because it sits outside of an ISA. So when we've been adding money between sort of January and March, most of it's been going in Games Workshop. And I guess psychologically, part of the reason why I didn't want to add money this week is I came across something called anchoring. I had to discover this term, but it basically is where even though I know that I can pick up Games Workshop for like 15% below my average price at the moment, and I think that's a good place to pick it up because I could have got it for like 15% cheaper the week before. I was like reluctant to buy. I know that's irrational, and I'm pretty sure I'm not the only person feeling that at the moment. It's sort of like you feel like you missed an opportunity and maybe it'll come again, but at the same time you should just be buying because you're happy with that buy price and etc. So that was quite. I haven't really felt that before, so that was interesting. And yeah, I mean, a lot of people for Games Workshop are now sort of highlighting what I guess I've been highlighting, which is that this traditionally expensive stock doesn't really look that expensive at the moment following the fall. And basically none of the optimistic growth in either intellectual property or international sales has really been factored in. So that feels like it's got some potentially good upside. Amcor was interesting this week. So this is a relatively new position for me, but I've gone in quite hard. I just think it's a great, promising semiconductor play. It's a semiconductor trading on a PE of 8, recently reached scale. Yeah, it's still building to scale up. It's still a very small company by American standards, but it's got a lot of promise, and it's already highly profitable from a sort of margin percentage point of view, and it's like EPS went up more than 80% year on year, which is the kind of growth I really like to see. So again, I'm really optimistic on this company. I would happily buy more under 26 without even having to think too hard, and at the moment it's something like 23.5. So I will be buying more Amcor in the once April gets going. Genius is also another interesting one. So that year-on-year change, I haven't written that down, but I am down more than 35% on my position in Genius. So that's a little bit unfortunate, but I went on an earnings call at the end of January. They actually just published that to the SEC. So fine. And yeah, we remain committed to this, so let's do it. I called this a Simply Wall Street article because it wasn't really a recommendation, just highlighting Phoenix growth in terms of its excellent dividend and growing business. So potentially worth a read if you want to read more on Phoenix Group. T Rowe, I'm really happy with my position in T Rowe, and it's now comfortably in the green. I think I got an excellent price, way below its 5-year averages, so that feels great. I do definitely want to talk about Fevertree though to round this up. And it was really interesting. I went on the Fevertree's earnings call, and they published the results at 9, and the earnings call was at 10. And when they published the results, the share price went down like 15%. Like it was obvious why. Revenue guidance was weak, and margin pressures are there for all to see, right? But then the earnings call was actually very convincing. So first of all, the revenue, it was a case of, well, it's on a constant currency basis, but it's going to be slightly higher. Yeah, okay, it's not as good as last year, but last year had some sort of built up demand. Yeah, our earnings are definitely under pressure because of cost pressures, but here's how we're going to mitigate them. And by the way, everything in sort of like, the industry, the premiumization of both spirits and mixers, it's all moving in our favor. People are getting wealthier. They want to spend more on quality of drink rather than quantity. And we still like our business. And you could basically watch the share price recover and in the end finish up like 10% on the day from where it started. So, between the peak at like, 9:45 and the end of the day, something like 25%. It was really surprising. Now, after this, I decided to do a video on it. So feel free to check that out. I'll put a link in the description below. And if I'm honest, I'm super evangelical about the product, but I did find the results a bit underwhelming, to be honest with you. And more or less, I think the share price is currently up to date with the situation. And by that I mean, like, if you're picking this up at like 1,800, £18, my opinion is the share price is worth about £22, taking a reasonably high multiple and reasonably optimistic that they're going to hit their targets and their mitigation. So yeah, okay, there's like 20% upside there, but for me that's the required margin of safety. So, I'm not going to be buying more of this. I will happily take the special dividend that they announced. That was quite nice, like 43p a share. I've got 225 shares, so that's pretty significant dividend from unexpected place. But I'm going to probably put it into Gamma because I think that's more underpriced. And basically though, I'm going to be keeping my fever tree, watching what happens for the next 1 or 2 years as they scale. Hopefully they become more efficient. They're building production in America, which means they won't have the shipping and logistics costs to deliver stuff. It all made a lot of sense, honestly. It was a surprisingly good earnings call considering the initial reaction at 9 o'clock, which I felt was totally justified. And the earnings call did a good job at sort of explaining how they were going to bridge, and basically climb back to 30% net profits where they used to be, 5 years ago. Now they're struggling to keep at 20%. So that journey, and assuming they can get there over the next few years, transforms the business, and suddenly it's a really great investment. But to me, I just need them to start delivering because it's sort of felt like jam tomorrow for a number of years for Fever Tree. So I'm slightly less optimistic than I was. Previously, I had a range of 21 to 28 just based on a lot of unknown factors. Decided to be brave and basically give a single price point, and that is £22 for a share price, which is currently about 18. So decide if that's for you or not, and ultimately if you agree with me, and good luck. And CRM, no news this week, but it did pretty nicely as part of the tech rebound, so that felt great. Anyway, that's my top 10 roundup. Let's see the buys and sells. All right, so this isn't going to take too long. Redrow here, I used my dividend from Realty Income for. This is a kind of strategic change in a house builder in the UK. By the way, I think you could basically pick any house builder in the UK right now and get a pretty good entry price. I like Redrow because of its transformation and the way it's changing focus. I think it's onto something, and I think it's relatively cheap. So Vistry is the other one I would say if you're cost conscious. Vistry or Redrow. If you're like safety conscious, go for Persimmon. You can't go wrong. I do want to talk about this though, and this is Elixir International. So the Jackal, who actually highlighted Amcor to me as well, as a member of Discord where I am, highlighted this as well as one of those sort of companies that's worth a look. Specifically, they acquired an American company, and actually I think they got a great price for it. They term themselves a challenger consultancy, but they're basically a bespoke financial advice, professional services kind of outfit. Small market cap, but already profitable, highly efficient, apparently very capable. Everything looks extremely polished. Now, in fairness, I bought this on Friday afternoon, so I'm not going to lie, I haven't got a ton of due diligence at this point, but I've put 24 quid in it, so I've got a little bit of time to familiarize myself with the business. But certainly a quick reading and enough to put 20 quid on it. I really liked what I saw basically, and I have a very similar company called Knos, which ticker KNOS. Slightly bigger, but again, similar sort of professional services organization. So I kind of like those companies because they're very, capital light and tend to have really great margins. Even though they're small businesses, they have the potential to like multi-bag from a relatively safe perspective. So that to me appeals. And again, for anyone who's newish to my channel, my objective this year is to kind of pick up some smaller companies in both the US and UK. So Amcor is a good example. It's just a few billion, but quite small for America and in that sphere. And likewise in the UK, I want to sort of target the sort of 100 million to maybe 1 billion sort of level as well. And again, this is a good candidate for that as well. So like I say, I won't pretend I'm the biggest expert on this company. I didn't even know it existed till about 12 hours ago as I'm recording this video. And decided to make a move on it. So I guess let me know what you think, or if you've heard of that company before or have a stake in it, but it looks pretty interesting to me. All right, and last but not least, I know I have no loyalty towards shares, but don't think I've suddenly abandoned legal in general. I still think it's a superb company that should be in every dividend investor's portfolio. One of the best dividend plays in the UK, certainly. For me though, I was just rounding down and freeing up a very small amount of money for Elixir. So I had 328 point whatever. I sold the whatever to leave myself 320 shares. Actually, I'm up 12% in just under 2 weeks on my LGen position. So it's about 0.8% of my portfolio. Obviously, I wish I went bigger, don't you always when it happens. But I'm also I've got a similar size holding in Aviva. And a slightly smaller position in Lloyd's, and they're all up sort of between about 8 and 12%. So I guess if I combine them, it feels a little bit better. But yeah, here again, don't read too much into this. I just picked a share that I could, very easily sell a couple of them round down. I don't really like decimals, but it happens when you're acquiring positions. This was them. So, Legal in General to me is still a buy, even under about 280. My average is 24 something. So, again, comfortably in the green here. I just did it again to free up money. So, honestly, though, relatively quiet week this week for me. So, for those who join in to hear about my trades, you're maybe going to be a bit disappointed. But honestly, it was quite nice to have a calm week where most things moved in the right direction. My portfolio turned back to green, which feels great. And we're just basically plodding along as an investor rather than a trader this week. So hopefully it was interesting all the same. Again, I welcome any feedback both on my top 10 list as well as the fact I have a proper microphone. So hopefully the sound quality is a bit cleaner. Otherwise, thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.